Efficient engines have powered the stunning recoveries at Ford and General Motors, and now they're coming to the skies. Virgin America has just announced that it will spend as much as $1.4 billion to buy fuel-efficient jet engines for 30 Airbus A320s. The supplier CFM, a joint venture between GE and French company Safran. Here to talk about the big bet on fuel efficiency is David Cush, President and CEO of Virgin America. David, welcome to the Inside Track.
Thank you.
It makes sense to everyone why airlines would want to buy fuel-efficient engines. The question I have for you is, why now?
Well, I think the key thing is that technology is now available, and really you have to wait for the right time with the technology. We fortunately have two manufacturers who are advancing it. The CFM, the engine that we're buying, basically just came out with this technology, or the concept of it recently. And so the economics are there with high fuel prices, the technology's there, and it's, the right time to do it.
The lead time, however, on delivery is nothing like going to your GM dealer and buying a Chevy Volt. You're not going to have these things in service for several years yet, correct?
Yeah, it's a great point, that these airplanes will come in about 5 years, and that's really a lot of the dilemma when you have volatility in fuel prices, is how do you plan forward for a financial return on a big investment like this? And so we assume fuel prices will remain high, and so this makes a lot of sense for us.
When you say remain high, what neighborhood are you thinking of? Clearly, there is a correlation, right, between jet fuel and oil. So you have to make some implicit assumption about where oil is going to be 5 years from now. What do you think?
Well, we have two things we have to look at. One is the crude oil prices, which have moderated down to $100, which we think is probably somewhere in the $100 to $120 range for the next 5 years. The other is the distilling cost, the crack spread, which is at historic highs right now, $30 a barrel. That's really the source of volatility right now. So when we looked at this engine originally, we were thinking about $80 to $85 jet fuel prices. Now jet fuel prices are at $130, so it's even more compelling than we originally decided to go forward with this.
And why this particular engine, the Leap X, right? Is that what it's called?
Yes.
As opposed to maybe the competitive offering from Pratt Whitney, the unit of United Technologies.
Well, we look very closely at Pratt Whitney. They've got great technology. It's basically promising the same amount of fuel savings, or the same neighborhood. And the reason we went with CFM, very simply, is because we have a long-standing relationship with them. In the end, they came in with a very compelling economic offer, and we're very comfortable with them.
When you say compelling economic offer, on a percentage basis, how much cheaper, perhaps, than you could have got it from Pratt & Whitney?
I would say the economics are somewhat the same. The main thing was the long-term relationship we've had with CFM made us very confident in their ability to deliver.
At the end of the day, economics are what it's all about for a businessman. What are the business conditions in airlines like right now, especially in North America, which is your responsibility?
Well, a couple of things that are really driving the picture. One is obviously the revenue side, which we see a strong revenue environment through the summer. Demand's very good. People will go on vacations no matter what, is what we've seen. We're quite concerned about what happens when the fall comes around in the winter. We think the prices are getting to a point where we're seeing some demand destruction. We really won't know until we get into September just how big that is. The other side I will say on fuel prices is fuel prices are at a very uncomfortable level right now. They aren't at a level where they'll necessarily destroy airlines, but they're at a level where it will be very difficult for airlines to make a profit.
David, what's it like right now relative to last year at this time? Were people buying many more tickets for the fall?
Well,
in the summer of 2010?
I think we're actually seeing better demand this year than last year. The difference is last year fuel prices were a lot lower and ticket prices were lower. In general, ticket prices are about 15% higher this year than last year, and that's really our concern going into some of the softer seasons is, are people going to walk away when they see that higher price?
And the ticket price isn't just higher because fuel prices are higher. The ticket prices are higher because airlines are lumping all kinds of additional costs. You guys may not be doing it, but the other guys are. Does that run a risk of cannibalizing the industry, charging passengers so much more for bags that they ultimately look at the ticket price and say, wait a second, that's not worth it anymore?
Well, I think the key thing is we have to generate a sufficient amount of revenue to cover our costs and cover our investment. So that's, the simple business model. The real question is, are you going to put it all in the base fare, or are you going to break it down into pieces? But in the end, people talk about airlines gouging. We're a low-margin industry that either we're doing a terrible job running it, I hate to open up that line of questioning, or we're charging, basically what the market will bear.
David, you were saved by the bell. We've got to go to a commercial break. David Cush, the president and CEO of Virgin America, talking to us about his big bet on fuel-efficient jet engines.